Ladies and gentlemen, good day and welcome to the Q3 FY21 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sneh Kumar Purohit. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and a warm welcome to you all. I'm Sneh Kumar Purohit from Blue Lotus Communications. We represent the investor relations of GARWARE Polyester Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the third quarter and the 9 months ended for financial year 2021. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on the management beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. I would now like you to introduce to the management participating with us in today's earnings con call. We have with us Mr. C.J. Pathak, Whole-Time Director, GARWARE Polyester Limited, Mr. Pradeep Mehta, CFO, Mr. Krishnan, Director Sales, and Mr. N. Chandramouli, CEO of Blue Lotus Communications. We are going to start with the overview of the company performance for quarter 3 FY 2021. With that, we can switch over to the Q&A session. Thank you, and over to you, Mr. Pathak.
Yeah, thank you. Good afternoon. Good afternoon, everyone. I'm the Whole-Time Director at GARWARE Polyester Limited. It's a pleasure to welcome you to the quarter 3 and 9-month financial ended on 31st of December 2020. And for this earnings conference call of GARWARE Polyester Limited. I'm happy to report that we have had another healthy quarterly performance. Consolidated quarter 3 PBT at 64.29 crore, registered to 77% growth in quarter 3 in financial year 21. The company became a carbon negative company, and we consume more polymer waste than we produce. One more important thing is that we have put up a paint protection film plant in India, which is the first time we pioneer in India, and the plant has gone on steam in December. We have an incremental turnover of 300 crores by financial year 23. This may provide additional growth momentum. Paint protection film is a film which is used on the car body, as we are already into the specialty films which are used on the car window glasses. And we are the only exporter and only manufacturer in India for this product. And we are exporting to over 80 countries this product. Now we ventured into the paint protection film, which is used on the car body. This is the most popular product in the Western world, and this is a recent development, which is a really technical product, and we have an expertise to manufacture. We started sampling out this to our distributors and through them to the various dealers in all over the world, and we have received a very good response from the most of the distributor dealers. Before I hand over to Mr. Mehta, our CFO, for the financial highlights for the quarter and 9 months, I would like to give you a small view about how we are different than the normal polyester film manufacturer. Polyester film manufacturer is mainly polyester films are used for the flexible packaging, and most of the manufacturers are in that segment. There are only 2 manufacturers in India manufacturing this thick polyester film which are used for the insulation purpose. Out of our total turnover or revenue, 50% of revenue is coming from the sun control films, so solar control window films, and which is used for the car window glasses, building glasses, architectural application, decorative application, and almost 98% of the product is exported. In the industrial product division, we manufacture the polyester films ranging from 10 micron to 350 micron. We have a wide range of products and we concentrate on the niche market and niche product. So every manufacturing line we have a niche product, and that is how we keep our products insulated and margins insulated by remaining into the niche product. That's how we are different than the normal polyester film manufacturers and not comparable with them, because that is a different segment of business, and what we are doing, we are into a different segment of business. So with this, now I hand over to Mr. Rajit Mehta.
Thank you, sir. Good afternoon, ladies and gentlemen. On a consolidated basis, in quarter 3 FY21, the total income for the quarter was 287.31 crore, which was an increase of approximately 40% compared to quarter 3 FY20. Earning before interest, tax, depreciation and amortization for the quarter stood at rupees 274.94 crore versus 27.07 crore in quarter 3 FY20. This is reflecting 26% EBITDA margin. Net profit after tax reported was 42.78 crore, which was an increase of 276.25% on a year-on-year basis, while PAT margin was 15.14%, which was an increase of 800 basis points on year-on-year basis. Now, talking about the performance of 9 months of FY21 on a consolidated basis, in 9 months FY21, the total income was rupees 710.65 crore, which was rupees 713.79 crore in quarter 3 FY20. The level was maintained at same level in spite having a COVID period in the current financial year. Earning before interest, tax, depreciation and amortization for 9 months FY21 at 175.54 crore, reflecting 25% EBITDA margin. And net profit after tax reported was 94.15 crore, which was an increase of 44.96% on a year-on-year basis, while PAT margin was 13.43%, which was an increase of 400 basis points on year-on-year basis. The net debt to equity ratio as low as stood at 0.08 times. I would also like to add that the company's improved performance has reflected by the return of ratios like ROC is 19.73%. This is adjusted for revaluation reserve, and ROE stand at 13.78% after adjusted for revaluation reserve. Also, the company has achieved the net profit margin of 15.14% in the last quarter on a consolidated basis, and we believe it will improve going forward. Thank you all. With this, we can now open the floor to the question and answer session.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello. Thanks for the opportunity. Just to understand, you did allude to the value-added products and sun control films. So if you could share some more details on the value-added products of ours, where as per our presentation, we are almost around 74% of the total revenue. So details with regards to, what kind of products are there, each of the product details of the market share which we have, the market size of those products, domestic as well as global, what kind of competition in each of these products have, and what is basically our USP, or what exactly, how are we able to create that differentiating factor which probably our competitors are not able to get into this kind of products? As you mentioned, in some of the products, we are the leaders, or we are the only one out of the two players doing those kind of products. If you could share some more details on that, that is question number one.
Okay, thank you. The sun control films is made out of various components of polyester films. The basic film is a polyester, which is manufactured from 100% virgin polyester chips, manufactured with a in-house designed recipe for making this, because it has got a particular requires a particular shrinkage, it requires particular age and clarity. So there are specifications which are required for this, which is controlled by the company. The company has got the full setup, like its own R&D center, where all the recipes are designed, monitored, controlled, and quality assurance is taken care. We have our own manufacturing plants where we manufacture our own raw material from the PTA and MEG, which is basic raw material. Then we make our own plain films required for this purpose. Then dyeing or coloring of this polyester film is a very critical process, and only two companies in the world are having that technology. We are one of them. So we do the coloring of the films in-house. Then there are different types of solar metallized films which are required. Again, that is a technology involved in that. So that also is manufactured in-house. Then we make the different kinds of adhesives required for this, and this is the process. And there's a nanotechnology involved for making some of the products. So all these things are, we are the only vertically integrated company for making these products, and we make this. About my colleague Mr. Krishnan may also add to this, that how it works in the domestic market as well as international market. There are two different applications, for auto application, auto window glass application. In India there is a ban on that, but internationally only two countries are having ban on using this type of products. Rest all countries we are supplying to almost 80 countries. This is also used for the safety and security on the building window glasses, and there are regulations in many countries for use of this film, and that is made compulsory, so that the use of glass is increasing day by day. And in order to have a safety, the safety films are recommended, which we are also manufacturing. There are few manufacturers, quality manufacturers in the world, and they all are situated in USA. Mr. Krishnan, would you like to add to this? You can add.
Yeah, I think as rightly mentioned by Mr. Phatak, we are the only manufacturer in India, and therefore you can say we have 100% market share per se in our country. But we compete along with other global manufacturers and we are the third largest selling brand in United States, which is the most mature market for automobiles. And we compete also in Europe, where again we are about the third largest brand which sells in that market. So our product is it is a sought after product. We sell it under a couple of brands. One is known as a global brand. The other is of course the GARWARE brand, and also the Sun Control brand. The global brand is most popular and it is well identified across the globe, and we sell in almost all the key continents, as was mentioned. So this is a unique product, as was explained. This is one set of product which is more on the window film business. The other one is in terms of the polyester film business, which we also spoke about. There again, we have some specific products which cater to, one is the shrink, which is again, we are the only manufacturer or major manufacturer in this country where we sell to the beverage industry, and this is used in the bottles, etc. You see a Pepsi label or a Coke, there's every chance of it. The film is made by us on which the labels have been put on. So that's one of the key business. The other one, of course, is the electrical industry, where our product is used in compressors, etc. And there again, we play a dominant role. So these are about the specialized products in terms of what we manufacture and sell globally.
And if you could give some idea on the market size of each of these products, our market share, and typically what stops competition to come in these products? I understand in sun control you are the leader, but other products also.
Okay. In terms of market share, for example, in the sun control business, the sun control business is somewhere in the region of about 4.5 to 5,000 crores or so globally we are talking of. Probably the size of the market in the segment that we cater to. But it is very difficult to say because the key manufacturers are in United States, and apart from that, you have one or two identified in Korea, and a couple of them in China. And then again, you have very low value or low product value items produced, say in China, where we don't compete with. So it is rather difficult to say exact market share globally per se. We have a lot of headroom that we can still go up to, and in India we are the only manufacturer, as I mentioned. Similarly, on the shrink or in the electrical industry, shrink business again is a global business, and we cater to specific customers out of that, specific large customers. And these are also located in Europe, in South America, etc., apart from India. In India, if you see, our market share is somewhere about a little over 80% or so in terms of our product that we sell. And electrical industry, again, we are a key supplier, and we have a high market share in that product also. And we export or sell even to China, which is a very competitive market. So that really is the strength. The technology is a key barrier in terms of entering into this market. People don't have the technology, and there are various ways of making the window film, for example, but the technology that we use, nobody else has it, and that is something which we will not be able to obviously divulge the technology, and we have an exclusivity towards that. Our products are also patented, incidentally. We have US patents for our product.
Sure. So just to understand the slide which you have given in our presentation, it's a very detailed presentation, so that is quite helpful. So on this slide where we have given the revenue mix, April to December, it speaks about 74% being value-added films, commodity films is 26. Then on one side, they are given sun control is 47, IPD is 50%, and thermal is 3%. And the last diagram on this particular slide, it says automobile sun control is 26%, value added is 32. So I'm not able to get that value added 74%. So is it like if I say sun control as 26 and shrink is another 12%, so that comes to 38. Or if I add this sun control 26 and value added 32, then that comes to 58. So how do I break this 74 into, say, how do I get that number 74? If you can help us on that.
Mr. Rahul, this is Pradeep Mehta. The graph which is user-specific given, there is a IPD have a bifurcation of special film and commodity film. So for the better understanding of value-added film, we have separated and get added to show what is the value-added film. So you can't simply add this number, but IPD includes certain special product also, which is why we have separated as a commodity, because we are not in a commodity, we are in the specialty film business. So for a business segment, we have separated it.
Sure. Just last question on this PPF, which we have just started. And so what are the territories which we are targeting for PPF? What kind of market size this product has? And also how has been the growth in this particular PPF segment in last 3 years in terms of the industries?
PPF business, we have just entered, as was mentioned by Mr. Phatak. It's a global business again. In India, it's not so large, but again, in quick time, we have about 70% of the market share in India in terms of PPF. But key markets which we are focusing are in United States, Europe, Middle East. These are the key markets for the products. The total industry size again is roughly about 4,500 crores or so in terms of the PPF business. And the big players are all based out of the United States. The branded and valued players. Again, PPF comes with a different type of products. What we sell is a polyurethane product, the TPU which we use. There are other products which come with PVC and various other this also. We are not catering to that segment of the market. We are only talking of the TPU market, which is the premium market in terms of the automobiles.
Sure. Thank you so much. I'll come back at it.
Sure. Thank you. The next question is from the line of Parag Someshwar from AG Securities. Please go ahead.
Yeah, thank you for the opportunity. I have been doing research on Garware polyester and the film industry since quite some time, and having interacted with you people in the past, I always knew that Garware is a good company, but I think this presentation makes it clear it is not only a very good company, but a unique company in India, much different from other polyester companies. I have, I think, pretty good information about the company. I have just one suggestion for Garware team, but before that suggestion, I would like to share some of my observations, and after that I would like to give the suggestion. And you may tell me if I am wrong in any of these my observations. As per your press release and presentation in FY23, you projected sales of 1,500 crore and PAT margin of 14%, meaning a PAT of 210 crores. That is number one. Second, your ROC, as you said, it is 20% excluding revaluation reserve, which will go up to about 35% in FY23. Third is you have a huge land in Mumbai, which with a monetization potential of close to 400 crores. Now your market cap is 1,100 crores, you have a net cash of 100 crores, you have huge land. So my suggestion is the board should consider a buyback of shares because your company is significantly undervalued on an absolute basis. And on a comparable basis, if I compare a company named Expel, which you also mentioned in your press release in paint protection film, it's a very comparable company with Garware for paint protection and window sun control film. Expel sales is also about 1,100 crores, similar size like Garware. In fact, Garware's gross margin, EBITDA margin and PAT margin are higher than Expel. And Expel is quoted at a P ratio of 100. We are quoted at a P ratio of historic 10 and prospective maybe 5 and plus our asset value. So my suggestion is considering this absolute undervaluation and comparable undervaluation, Garware board should consider a buyback of its shares. So if you have some views on the buyback, Mr. Mehta, could you please share on the same?
Thank you, Mr. Parag Someshwar. It's good to understand from you, and it's really buyback of shares is will be discussed. We noted your point, and we will in due course we will discuss. If board approve, we'll come with that proposal.
Okay.
This is Krishnan here. On the Expel observation which you mentioned, you are right in what you said, except that Expel original company is called Expel Technologies. They are in the software business. What happens is when a company is in the software business, they get clubbed along with the software companies. It is right that they sell PPF and window film, which is their product, but they are a software. They provide the software for cutting these products and applying on vehicles, etc. So they are seen as a software company. To give you another similar example is in terms of the automotive business, which you have Ford, General Motors, Toyota, etc. They all have a P multiple which is similar to say 14, 16, etc., which is more closer to the automobile business. The P multiple of Tesla is 1,400. Tesla is the most valued company today. If you look at the turnover of Tesla, it is much, much lower than Toyota or anybody else. But in terms of the most valued company, because Tesla is again in a different mode. So all I'm saying is Expel started as a technology company and it's seen as a technology company. Therefore, there is a differentiation in terms of the value. But of course,
please continue. Then I'll just
So that's how they have built up. I'm only saying, and again, if you see Expel price about 2 years ago from now, it was under $4 in terms of their price. So from there, they have grown really.
No, my observation Expel also, they have software part, I think only 30%. The film part is about 70%.
Correct.
Right?
Correct.
So basically, we have also 70% of value-added products. And in spite of there being a software company, their gross margins, EBITDA margins, and PAT margins are lower than that is number one. And second was Expel. Actually, the price and market cap started increasing after globally they launched this paint protection film somewhere in 2018. I think globally these TPU-based films are introduced only 2 years back, right?
No, they had it even before. But anyway, you're right. I mean, your observation is right. I'm not trying to. I'm only trying to explain to you the background of Expel.
Yeah,
they are in the software business, or they started originally as a software company, and that's how they progressed.
Anyway,
as compared to this, we are seen as a polyester film company. Although, as Mr. Phatak explained to you, that we are not just a polyester film manufacturer. This is exactly what we are trying to tell you, that we are a specialty film manufacturer, which is different.
Yes. Sorry.
That's exactly what we were trying to tell you.
I'll just take 1 minute of yours. So I really appreciate Mr. Krishnan because it's a really different, unique, global specialty polyester film company. Even if we forget Expel, I think on an absolute basis also we are quite undervalued. So buyback, I think as Mr. Mehta said, I think we should discuss in the board, sir. I end my case, sir. That's all from my side, sir.
Thank you.
Thank you. The next question is from the line of Nisarg Vakharia from Abhinandan Leasing and Finance. Please go ahead.
Thank you for organizing this call. If I heard your CFO correctly, you said that this is the base level of profitability margins that we can expect going ahead, and we don't have any one-offs or inventory gain or any of these things in this profitability?
Yeah, correct.
Okay. Sir, this new plant which you have set up, what is the economics of that plant? What is the gross block turnover and what is the ROC that you will get on that plant after 1 year of operation?
So investment is little between 50 to 60 crore, and we are targeting in next 3 years to achieve 300 crore from PPF plant.
Sorry, sir, can you repeat that? I missed it. Sorry.
So I'm saying the investment is less than 60 crore in this PPF plant, and we are targeting to achieve 300 crore turnover in next 3 years.
With what margins?
Margin would be plus 30%.
Sir, these economics that you are discussing more like consumer company. So I mean,
this is a value-added product here.
Okay. And sir, what is the what is the real reason for going for these public calls and sharing your plans on an FY23 vision? Because normally companies refrain from giving guidance going ahead. It's not like you need to raise capital because you have a very well adequate balance sheet. So is it that we want the market to appreciate us more, or you have some other plans? Because this is the first time you're organizing a conference call.
Yeah, we just started that for people to understand what we are. Because as earlier also Mr. Krishnan said, we are misunderstood that we are a polyester, and there are so many polyester companies, and we are compared with them, and that is the reason why we are doing all this.
And market to appreciate our fair value, because
I appreciate that, sir. And lastly, looking at your current profitability run rate, you are already very close to your FY23 target. So are we sort of being slightly conservative on that target, or how to look at it? Because you're already at some 40 crore profit run rate, which is like 160 crore PAT. So is there some seasonality in our business, or this is your conservative way of giving us a profitability target?
No, this is a conservative way.
Okay, sir. I appreciate it, and all the very best to you, and hope we interact with you, on every quarter. Thank you so much for your time.
Thank you.
Yes.
Thank you. The next question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Yeah, good afternoon, gentlemen. Congrats for good numbers and very nice presentation too. My previous participant has asked the questions, but to add on to that and reiterate on that, so can you highlight more on towards that our new business, that is paint protection for autos, which is very much common in outside India, developed countries. So how do you see, what market size are we looking at, and what that pie we as a Garware Poly see on that, and with margins?
Yeah, Mr. Krishnan can...
Yeah, sir, as I explained to you, and as was mentioned earlier also, the total market is for about 4,500 crores roughly globally, and we are one of the key players, or we want to be a key player over a period of time. Currently, our capacity that we have and which we expect to reach in the next 3 years, we should be able to do a turnover of about 300 odd crores in that. The largest player in that market is Expel, and they are based out of San Antonio in United States. So we are among India, we are the only manufacturer, and we see a good potential as we go forward in terms of the product.
So what is the Expel turnover in this product?
Expel turnover is over 110 million roughly as of last year, but probably this quarter it is even higher, somewhere about 900 crores as of now.
Oh, so there is a huge gap between the first player and we entering.
Yes.
So do you see a big scope of growing there, or
Absolutely.
we look at a different market also?
Absolutely. Expel sells globally. They don't sell only in India. They sell globally. So we have a lot of headroom, and therefore we are selling. We will be selling in US, Europe, Middle East. These are key markets. We will be focusing in all the markets.
That's great. And sir, our safety glass film, which is banned in few countries, like maybe even in India. So what's the scope you see? What's the reason of this banning, and do you see any opening up on that side?
Safety film is not banned. Safety film is for architectural application.
No, that one, sorry.
The window film is banned in India. So that is a government we can't do anything about that really.
Window film is banned by the Supreme Court on a PIL made to them, and the decision court has taken on a technical ground that there is no specific mention, because the Central Motor Vehicle Rules 100 provide for the VLT, visible light transmission, how much transmission of light should be there in the car.
Right.
That is regulated. So till the decision has come in the month of May 2012, the regulation was the 50% from the side windows and 70% from the front and rear windows. But there is no specific mention how to achieve that transmission. So that's why court has banned it. They mentioned that it's a job of the regulators and the legislators to make an amendment. And we have approached to the ministry of road transport for carrying out the necessary amendment.
So before this ban, what was the business we are doing in this in India?
In 11-12, we have done business of about 75 crores that year.
Thank you, sir. Thanks for answering my questions, and good luck to you, sir.
Thank you.
Thank you.
Thank you. The next question is from the line of Ankit from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. So, few questions on the business side from mine. Sir, if you look at the company's trajectory, from 2012 to 2017, our operating and gross margins had been our operating margins had been ranging between 8 to 11%. And even 7% in FY15, and our gross margins were broadly around 40 to 50%. However, from FY19 and 20, and even in this year, we have seen significant improvement in our gross margins to around 55-60%, and our EBITDA margins have further increased to 15%, 17%, and in this year we have easily crossed 22-23%. So, what are the major reasons for such significant improvement in our margins? What has changed now over the past 2-3 years?
Yeah, there are several measures the company has taken. That is the centralization of activities at a place. We had different units located at different places, which were stopped and shifted to Aurangabad at one location, that is Baluch. We have another location also at within Aurangabad, that is also operative. So we have tried to centralize all the manufacturing activities together. We have stopped the loss-making units or loss-making product. Then we have reduced the inventories. We have tried to manage the working capital in a most efficient way. Then these are some of the measures we have taken, which has resulted. Then we have selected a better product mix and market mix. We have shifted market to Europe and USA, which is more paying market for the same product rather than China and Far East and these countries, Korea. So that has helped us.
Sure. So such significant improvement is primarily driven by this factor. It's not due to crude oil prices going down over the past 2.5 years.
No, as I said in the beginning that we are into different segment. Like 50% of the revenue comes from the consumer product division, where this raw material of crude prices has very insignificant effect on the operation of that division. In industrial product division also, the specialty, as I said, in specialty sector also, there is not much of a change because of that. And it makes a change in the commodities, but commodity prices are always dependent on the raw material prices. So it increases or decreases as per the raw material changes.
Okay. And then coming to sun control films, which is one of our major segment, we have seen our revenue grow significantly during 9 months of this year. Last year in FY20 we did turnover of around 333 crore from this, and in 9 months, despite the first quarter being impacted in a big way due to COVID, we have done turnover of almost 320 crores in 9 months. So what is the reason for this significant rise in turnover in the segment?
Full utilization of the capacities. That is the reason. So far in earlier years, in the earlier 3, 4, 5 years, the capacity utilization was less, and there was room for utilizing the capacity. And we have taken lot of measures at marketing side also. That we have opened the representative offices in many countries. We have full-fledged office in UK and USA, UK at London and USA and Washington. So that has helped to grow the business, and we are utilizing the full capacity.
Okay. And in this sun control film, the entire sales is branded, or we also supply to some other customers who sell in their brand name?
Mr. Krishnan, you can take this.
Well, it's a combination of both. We'll not be able to divulge, but predominantly branded, if I may say so.
Okay. Okay. And on the PPF side, sir, if we look at it, Expel and 3M and even Expel and 3M are a big players in the market. They apart from Expel also has an edge in terms of software, and these are extremely entrenched players in markets like US and China and Europe as well. So what will be our marketing strategy to gain, let's say 5-6% market share in the global market, in PPF market? And if you can elaborate on that. And like sun control film, is our PPF product patented or technology patented?
In terms of the product, strategy for paint protection, we are a very recognized player. Our brand, global brand, as I explained to you, is the third largest brand which sells in United States. See, the tinters or the people who apply the PPF are the same who apply the window films on automobiles. So they have recognized our brand because we are the third largest sellers of the window film. So when we have now started with the PPF, so they have a recognized brand of a very high quality. In fact, our quality is considered the best in the market in terms of the window film. So now that we have entered with the PPF, they have the same trust and faith in terms of our product as compared to other established products in the market. And we offer this product through a network of distributors, and we have about 4,000 odd tinters with whom we are in touch with or in contact with in US alone. So all of them, similarly in Europe, in Middle East, etc., in all the markets that we have entered along with our existing network who already are in touch with the people who use the PPF. So that is the advantage that we have the network readily available to us in terms of entering the market, and we are trying to establish our product. Our product also in terms of quality has been accepted well in the market, and therefore the confidence that we should be able to get a decent share in terms of the market.
And what will be the contribution of PPF during 9 months?
We don't have a split of that immediately.
But has it grown significantly, or it's still a small contributor to our sales?
So it just started about a month ago or so, in the month of December, Mr. Mehta.
We just began in December. Yeah, we just began the operations of PPF in December, so it's hardly been a month.
Yeah.
Okay. Because I was seeing your videos. I think that would have been a soft launch then, even a year back.
Exactly.
Okay. And sir, on the guidance of 1,500 crore that we have given for FY23, 300 crore of incremental sales will come from PPF, and currently we have a sales of around 850-900 crores. So what will be the other major growth driver for achieving this target of 1,500 crore? I think incrementally we'll need at least 300-350 crore from our existing set of products. So which segment will drive growth in that?
Our current business is divided into two, IPD as also the window film business, as we explained to you. So both these have been growing for us, and we expect that to be bridged by these products as we go forward, apart from the PPF.
Okay. So any plans of launching any new products?
We are launching continuously. Our product portfolio keeps changing. And as we explained to you, we are more into the specialty products and not in the regular products that other polyester film manufacturers are, which is the packing grade. So therefore, what we are doing is we increase that product mix into specialty grade products on IPD. and or the industrial product. And the other one is in the window film also, we are going in terms of technology and in terms of products only on the high margin, high value products.
Okay. Thank you so much. I'll come back.
Thank you.
Thank you very much.
The next question is from the line of Siddharth Rajpurohit from JHP Securities. Please go ahead.
Good afternoon, sir. Thank you for the opportunity, and also congratulations on a very strong set of numbers. So, my first question is, for the 1,500 crore revenue, what will be the capex that we will be required to do?
Pradeep?
What will be the capital expenditure we would require to do to reach this 1,500 crore revenue, sir?
Yeah. So far we have planned to invest 135 crores. Out of that, some expenditure is already incurred and some is being incurred. That will be completed by end of this March. So within that, that will touch the 1,500 what is planned.
Okay, so by end of this March, we will complete this 135 crore of capex.
No. He's saying for achieving the additional 300 crore, expenditure are already partly incurred, partly are in plan. So by March we will complete. Okay. For another additional 300 crore, we have some plan, not yet declared, okay. But the target is there to achieve 1,500 crore turnover for capacity expansion.
Okay, so this we have to do more capex over and above this 135 crore announced.
Correct.
Okay. And sir, what will be our turnover of sun control films in FY23?
That's a number that we have not declared outside actually.
Declared.
Okay.
Yeah, we will await some more time before we get an outlook of that.
Okay. And what is our current margin in sun control films, sir?
We also don't declare individual product line margins if you don't mind.
Okay, but it will be on the...
competitive reasons are there, so we don't declare that.
Okay, but will it be higher than our consolidated current margin?
Yes.
Okay. And sir, what is our roadmap for FY21 and 22? What could be the revenue for FY21 and 22?
We have not made those revelations right now because we have just made the estimate of the PPF. So we would, if you don't mind, avoid that because it's too much of a call to make.
Okay. And sir, we have lot of real estate properties based out in Mumbai and other parts of Maharashtra, sir. What are the plans to monetize them, sir? And what is the estimated market value, sir?
Once the board decides, we will come out with that and declare that to stock exchange.
What will be the estimated market value, sir?
We have not done that process as yet. It is not even the thinking stage as of now.
Okay, so just wanted to understand, we are already sitting on a lot of cash, and there is we are generating close to 120 to 140 crores of operating cash flow every year, sir. So how do you plan to use this cash, sir?
We have multiple plans. We'll take to the board for it may be some expansions, it may be some distribution. So all these things will be put up to the board time to time, and then it will be disclosed.
Okay.
Yeah, as Mr. Krishnan also said, in the PPF area, there are already existing 4,000 tinters, as they call them in America, who are the people who work on cars and tinting of cars. So that expansion and several other products are already continuously in research. So those are plans. The money will be used for that.
Okay. So, okay, sir. And sir, are these technologies self-developed or we have sourced from somewhere? PPF sunflower?
Technology at our end is developed by us.
In-house technology.
R&D, yeah, we have R&D center. They have developed.
Mr. Rajpurohit, there's a lot of R&D that's continuously going on. This is a high chemistry company which works on developing newer and better products, and that's what they are focusing on. So all the technologies are internal, many of them patented also.
Okay. And sir, many of the players have announced capacity expansion. So what is the current demand supply scenario globally, and how do you see it going forward?
As at the beginning I have said that we are not into that race of commodity players and development or investment into the commodity sector. So actually there is a lot of capacities going to come ahead of time, but that all are in the flexible packaging segment. So we are not into that race.
Okay. And the current capex that we have planned, sir, so it will be all through internal accruals?
So it is partly financed by the bank and partly on internal accruals.
So what will be the share of borrowing, sir?
So our debt equity ratio is less than 0.1 times of the equity. So there is scope, there is room for going for the debt funding.
And what will be our cost of borrowing, sir?
It is less than 9%.
Okay. Thank you, sir, and all the best. I'll come back with you for more queries.
Thank you.
Thank you. The next question is from the line of Swecha Jain from ANS Wealth. Please go ahead.
Hi, sir. Thank you for giving this opportunity and congrats for a great set of numbers. So I have few questions. So if you could give us a sense of product-wise capacity and capacity utilization that we were at 9 months, and also the sales breakup product-wise, such as BOPP film, sun control film, metallizer, PPF and thermal lamination film, sir.
Yes, the capacity of industrial product division is 42,000 tons per annum. These capacities are interchangeable. Because we make from 10 micron to 350 micron, so on different line, different capacities, but based on certain microns, say like 12 micron for thick film and thin films, and say 180 microns or 125 microns for the thick films, the capacity is best. So altogether capacity is 42,000 tons per annum.
Okay.
Right now it is utilized completely. In sun control division, the capacity is that is on sold on square feet basis. So it is 2,400 lakh square feet per annum at present, and PPF capacity is 300 lakh square feet per annum.
Okay. And so would you be able to give the 9-month sales breakup product-wise, sir?
No, because of competition reason, we will not able to share this detail.
Fair enough. So, with respect to sun control film, I think you mentioned that we sell it through our dealers and distributors, right, sir?
Yes.
Okay. So, what were the inventory levels for 9 months at the dealer level?
At the dealer level, it will be difficult for us to monitor the inventory level. See, what happens is we ship goods from our plant in Aurangabad. As was mentioned to you, the window film business is predominantly an export business, and inventories are in the plant, inventories are on the sea, plus at our distributor and the retailer. It is almost impossible for us to estimate what exactly was the inventory level. But the fact that it grew substantially, we can say that there was pretty good movement in terms of our plant.
Okay.
Sir, our business model is on cash and carry model, so we don't.
Okay. So we don't give any credit to them, right?
No credit.
Okay. And so on the PPF side, have we tied up with any OEM players, or what is the marketing or selling strategy that we are thinking? Is it only through the tinters that you mentioned, or we are also looking to get into some tie-ups with the OEM directly, sir?
Well, our current strategy is to sell through our network of distributors. It is actually we sell to the distributors. Distributors in turn have retailers below them. For example, in US we have 5 key distributors, and these 5 distributors below them, they have somewhere in the region of about 800 to 900 retailers. Under them, they have about 4,000 tinters. So this is the total lineup in terms of the activity. Okay. So we sell through our network as of now. Going forward, if there are opportunities, we will certainly look at that.
Okay. And so I have just two more questions if I can take this up now, or I can rejoin the queue.
Go ahead.
Okay. So with respect to our consumer product division, have we launched any new product for in these 9 months, either for domestic or international market?
See, we keep on changing our product portfolio, as was mentioned a little while ago. So even in consumer product, we have, yes, launched a couple of products which are more to do with the window film business, and those have sort of excited the market.
Okay. So can I then fairly assume that the window film business is the main product in this division?
In consumer product, yeah, window film and the PPF business are the two products.
Right.
Going forward, the PPF.
Yes.
Okay. And so just the last question, on a long-term sustainable basis, what kind of EBITDA can be, any guidance that you can give us for a long-term?
We have not given that, Swechha. As you know, that we are expecting a better guidance. So probably in the next quarter earnings call, we'll definitely be able to give something better. That's why we've not given one this time. Yeah.
Sure, sir. Thank you and good luck, sir.
Thank you so much, Swechha. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Keshav Garg from Countercyclical Investments. Please go ahead.
So first of all, many congratulations for great results. Sir, I would first strongly suggest that you please do a share buyback, as a one speaker said, sir, because already we have 1,000 crore of revalued land and 100 crore net cash, and market cap is 1,100 crore. So basically, the core business is coming for free. And sir, as you are aware that, sir, share buyback is far more efficient, tax efficient.
Mr. Garg, we have taken the suggestion. It's already been stated. So if you can just, because there are so many other questions, so this has been taken in and it's going to be very critically discussed internally. I assure you.
Thank you. And sir,
please go ahead with your questions.
Understand whether sun controlled films, sir, in FY20 it contributed 38% of sales, and in 9 months it contributed to almost 50% of sales. So is this proportion sustainable going forward, or there is some one-off due to which sun control film proportion has increased and it might again reduce going forward?
No, it should be sustained. As was explained by Mr. Phatak, we were not using the full capacity of the sun control plant earlier. Now we've been doing that in the last 9 months.
Okay, sir, great. And sir, also, sir, just wanted to get some understanding of your thought process about the consumer products apart from sun control and PPF. So are there any plans to get into, let's say, mobile screen guard or such other products?
Not immediately, but if we do, we'll make an announcement.
Yeah, we are not making any future product announcements right now.
Yeah.
Keshav, thank you so much.
Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Dhanil Desai from Turtle Capital. Please go ahead.
Hi, sir. Good afternoon. And congratulations for a very good set of numbers. Sir, question. The first one is on the PPF side. So when I was looking at the PPF market in US, so essentially, 3M, XPEL, and AGs are the 3 major players there, and they've been there in the market for a while. So, in terms of strategy, how do we want to gain market share? Will it be through better pricing? Will it be through product differentiation? How is it that we will gain market share from the already established player?
Yeah, it's a combination of both, which you mentioned in terms of the market. And as I explained to you earlier, we have this loyalty with our customers who have been using the window film. So they are very convinced with our high quality product. So they expect this one also to be of an equal, similar quality, which is what we have offered in the market. And each product has its own strength in terms of stretching, in terms of application, in terms of usage, all that. We have entered the market with a superior product, which gives all the benefits to the customer. So in terms of product quality, it is the best, as I assume everybody would claim that, but in all honesty, we have put the best product forward, and we are expecting our customers to be happy with the price at which we have launched this product in the market.
And sir, you mentioned, I somehow missed the context, but you mentioned that you have already got 70% market share in PPF in India. Is that
in the domestic market? Yes.
In the domestic market?
Yeah, that's right.
Okay. On the sun control film,
so not of PPF, because PPF is just launched.
Yeah, so I was wondering, since it's been only launched.
No, it was sun control, not PPF.
Sun control. Okay. And sir, on the sun control film, even if you can't give absolute numbers, can you help us understand how has been the growth trajectory or value over the last 5 years in this segment?
Because those 5-year numbers may not be immediately available, maybe can we just send it to you once you send us a mail on this? Because this will have to be calculated, 5-year numbers.
Sure, sir. And the last question is on the so I mean, we see that there are 3 members from promoter family who are holding, who are there, in executive capacity. So is it like, a professionally run company or promoters are involved in day-to-day operations? And if so, what areas, they look after? If you can throw a bit of light on that.
Yes, the promoters are involved there because they are also involved in all the key decisions, and there is a freedom to the professionals in their areas. But yes, professional promoters are involved.
Okay. Thank you, sir. That's it.
Thank you. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir, and thanks for the opportunity. So what is the current capacity utilization right now?
Yeah, right now in December, the capacity utilization is 100% in both the industrial product and consumer product division.
Okay, so are we going to face any capacity constraint in FY22?
Company has plans which will be declared at proper time for that.
Okay. So by Q4, we may have, further information regarding this, right?
Definitely. We'll look forward to the information by then.
Okay. And sir, company is still paying, the full tax because now, the FM has reduced the tax to 25%, but we are still paying, around 33-34%.
Yeah, that is because of we are having a MAT credit. We don't want to lose that credit.
So by when, we may, enter into the new tax regime?
It will take at least another 1.5 years.
Okay, sir. That's it from my side. Thank you so much, sir.
Thank you, Dhiral.
Thank you. The next question is from the line of Ankit from Bamboo Capital. Please go ahead.
Yeah, thanks again for the opportunity. Sir, as you were saying, we have already reached, 100% capacity utilization in both the divisions, CPT and IPD. So, you did mention that, we have some capex plans, but, how are we looking to grow the business during FY22? Apart from the growth in PPF, of course, PPF will be starting from scratch, so that its base will be low.
Still, there is some room for converting the commodity which we are using right now. So that capacity will be converted for specialty, and by the time of utilizing that for specialty, the company is planning for the next further growth plan, which we will.
Ankit, if I may just add, it's a highly flexible plant. The machinery and everything else is highly flexible, and since we are end-to-end manufacturers, integrated manufacturers of films, that means from chip to the end film, we have the ability to turn any of our lines into any product that we so desire. So there's a lot of flexibility, and that's what Mr. Pathak has been referring to.
Okay. Thank you so much.
Thank you, Ankit. Thank you so much. Thank you.
The next question is from the line of Mrinal Tyagi, an individual investor. Please go ahead.
Yeah, good afternoon, gentlemen. Before I ask my question, let me extend my congratulations to the entire management for posting such a stellar number. And my question would be that how are we going about the pricing power as far as the auto polyester film division is concerned, and what is the growth that we are looking at?
Well, in terms of pricing power, auto polyester, I'm assuming is you're referring to the sun control, the window film business.
Yeah, exactly.
Yeah, we have a very good portfolio in terms of that business. And as I explained to you, we have a range of products which are premium in nature, and our portfolio has gone through a change in the last 2-3 years. And we are focusing on high quality products into the market. And our pricing, as I explained, we are the third largest selling brand in United States. Therefore, we have that pricing power as well.
Okay, perfect. Thank you so much, sir. Just one more question, if I may ask, please.
Sure.
Yeah. So, are we looking at any new vertical as far as our scope of business is concerned?
This is not yet, as we've been discussing through the time, we've not really looked at any new vertical that we are declaring now. There are many plans in the way, and hopefully in a little time from now, we'll come back to the market with this information and to the analysts with this information.
Sure, fair enough. Thank you so much for answering all the questions, sir, and wishing you all the best for all the future endeavors.
Thank you, madam. Thank you, madam.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good afternoon, sir.
Hi.
I have two questions. My first question is on the user industry segmentation. So your residential and other segment, in the last presentation it showed 14% number, and this presentation it is showing 4% number. So could you clarify, is there a resegmentation, or I'm still not able to understand how can the number degrow that much?
We've not shown a 4%. We've just eliminated the number 14, and because we are feeling that there may be a much better outlook in the next quarter, we would rather give the fact that is going to, as we are seeing margins improve. So our numbers improved to the higher side, but we will give that number out. But we've not reduced it to 4 anywhere.
No, but in the presentation, if you see page number 29, so that number where you have shown residential and other segments, that used to be 14% in the last presentation. So I'm not sure where the error is, which is now being shown as 4%. So because I think residential portion is much bigger for us, as we also talked about. Window film is one of the main segment for us.
I am not able to understand which. Unfortunately, the presentation is not with me. Aman, if you can just write this, we'll definitely get back to you. This definitely is not the case of a reduction in any particular margins at all. So if there is something like that, we will come back to you and correct it if there is something like that. But I think there may be the way we presented it may not be very clear. Maybe that.
Okay, I'll get back it on the mail. My other question is on, there's this big segment of value-added film or specialty film. So could you talk about what all segments do you, or what all industries do we cater in this value-added specialty film segment?
I thought we mentioned that in the polyester film business, key segments which we cater to, if we were to speak about, one is the beverage industry, which is with the shrink film, which we cater to. And again, it's globally we sell this product. Similarly, there's another industry which is the electrical industry. The product is used in the compressor, etc. So that is the other business. And again, in sun control, all these products, I would say, are specialty products in a way. So we have a whole host of products which caters to the specialty industry.
So these two products, I remember you had talked about earlier in the call, does they also come into, they don't come into sun control, right? These are pure...
No, they don't come in sun control.
Okay, and the major segment among these two will be the film...
beverages. Beverages means the bottling, etc., which you do. You put a label on that. If you've seen the label Coke, Pepsi, is written, Coke or Pepsi is written on the bottle. It's not written on the bottle. There is a label around it.
Yes, sir. That film you are providing.
That film could be of different types, but they use polyester film in many cases. That is the film that we supply.
This market is increasing because of the, we are using the PET on the PET bottle, which becomes easy for recycling along with the label. So that is the advantage. Otherwise, label has to be separated.
Actually, what Mr. Pathak mentioned earlier, apart from being a carbon negative company, that means we consume more waste than we produce, we are also helping others to be more environment friendly. Our products are in a process that allows all the other plastic bottles to be more recycled better and like saving energy. I mean, all the sun control is about saving energy. So it's about not just being yourself into a very high-end carbon negative company, but also assisting with your products to the rest of the world in general.
Sure, sir. And this is basically how much is export and domestic mix of this value-added specialty film segment, broadly?
Broadly, if you see the shrink business that we have, I would say we have roughly about 20% or thereabouts in the domestic market. The rest is the export market. Similarly, on the electrical industry, we have about 15-20% in the domestic, rest all are exported.
Sure, sir. And what is there in the packaging segment? What all products do we cater to in that segment?
All the products in the 10, 12 microns, all of them go into the packaging industry.
So this packaging is the commodity packaging, if I have to put it, because many companies do that.
Yeah. There are several companies in there. There are about 11 companies in India. Most of them are in the packaging industry.
Okay. So there's not much differentiation.
They don't have a different. That's why we are saying we are a different company as compared to others. We focus only on specialty product. We don't cater so much to the packaging industry, which is what we have been saying.
Yeah, that is shown the number. So my final question is, if you see our journey in the last 4 to 5 years, so overall our margins have improved a lot, and you have told about some of the steps we have taken. But in terms of industry segments, could you talk about maybe few segments which have degrown for us, which was maybe a big portion, and maybe it was a commodity business, that is why we have not focused on it, versus which segments have grown for us very well in the last 3 to 5 years?
Yeah, as was explained, our business in terms of the commodity we have reduced consciously because those are low margin products, and we have the shrink business has grown for us significantly from where we were. Let us say 5 years ago we were less than half of what we are catering to now, and similarly on the electrical industry also we have grown quite significantly in the last 4 to 5 years.
Sure, sir. And sorry, one final question. You've talked about 135 crores.
Sure. So just if you don't mind, you could even write to us if you don't mind. I'm sorry to interrupt this.
Yeah. No issue, sir. No issue. Thank you for your time.
Thank you so much, Aman. Thank you for your interest in it. Thank you so much.
Thank you. The next question is from the line of Kunal Bhatia from Dalal & Broacha. Please go ahead.
Yeah, sir. Thanks for the opportunity. I just had one question. In terms of gross margins, this time came off quarter-on-quarter basis. So, what would be the possible reason for that? Is it more to do with the rise in commodity price or less of value add mix? So, if you could.
Yeah, it's a mix actually. As I explained to you earlier, that we are concentrating on the specialty. And in specialty, when the specialty product increases, naturally in specialty the margins are more than the commodity. So raw material relatively, comparatively is less.
Sir, I'm asking on a QOQ basis, Q3 versus Q2.
What is it? You're asking about why there is a September to December, you are comparing both the quarters.
Right, sir.
Traditionally, I'll tell you, the December quarter is a low volume business, and different types of, because what happens, Europe, USA remains closed in December for business because of the Christmas holidays. So the type of the mix, what we are selling is different in that. It's more of high value products are not there. That's why this change is there. You must have noticed.
Right. Right. So this would normalize in the next quarter.
Yes, certainly.
Okay. Thank you, and congrats for the great set of numbers. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Piyush Gala from SK Securities and Investments. Please go ahead.
Many congratulations about third quarters. Sir, I got the other question answers, but my last question is, will company continue liberal dividend policy to investors?
Sorry,
Hello?
please repeat.
Will company continue liberal dividend policy to the investors?
Your past record is there for dividend distribution, which is 100% dividend distributing company for last 3 years.
Yeah, right.
Rest depend on the board. Once the proposal goes to board, how it consider.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Dhiral Shah from Phillip Capital. Please go ahead.
Yeah, thanks for the opportunity once again. So what kind of R&D spend we do every year?
R&D is a continuous process. We are regularly incurring the expenditure.
We are not declaring our R&D numbers on purpose right now because there are several things planned in the pipeline. So these are not separately mentioned figures anywhere right now. But it's a significant number, meaning it is required for, it's a high chemistry item. So what is done is in the lab. You must understand that most of the work is done in the lab. So it's done small and scaled up in the factory. That's what it's done like.
Okay, so with this help of R&D, are we also looking to launch any new product which is there in the pipeline?
Dhiral, that we have not declared now. That's what you were stating. There were several questions on that. So while we continuously develop products and we don't declare our future products currently, but this is continuously in development.
Okay, and so lastly, how do we manage our RM volatility?
We have a contract actually with the supplier, and as we said, most of the product are for export also. If there is a increase in the raw material prices, for commodity it is directly passed on. For export it takes some time. There is a lag for passing it on, but it is passed on. And rest on specialty, there are the contracts, annual contracts, and it is renewed. When it is renewed, that time it is passed on. So there are different, mechanisms.
So majority of our RMs are sourced from domestic market, or we buy from importers? We do import?
No, that is sourced locally from Reliance.
Okay. Thank you so much, sir. That's it from me.
Thank you.
Thank you.
The next question is from the line of Sarvesh Bodani, an individual investor. Please go ahead.
Yes, sir. Hi, am I audible?
Yes, sir.
Yes, sir.
Yeah. Sir, could you please split the revenue growth we have done in quarter 3 between volume growth and realization growth?
Okay, your suggestion is noted down. We will work out how we can do it.
Okay.
We can give it later.
Yeah. And so for the first half, we have generated 117 crore of operating cash flow. And this kind of conversion from EBITDA to operating cash, will it be sustainable going ahead? Hello?
Yeah. Yes. In fact, just 1 second. So they are definitely sustainable. That's what we've been stating all through the discussions. I mean, every time that we've had it, these are sustainable margins, definitely.
Right. Sir, so going ahead, like we plan to enter this paint protection film business. So will we have to loosen our credit terms, or there is no issue on that side?
No.
Because there are already existing competition. Yeah.
It's a similar product that or similar set of customers with whom we are dealing. So credit terms don't change.
Okay. And sir, a small suggestion to you, if you could please consider a name change from the current Garware Polyester to something like Specialty Film or something, because there are a lot of companies which exist.
Thank you.
They are not specialty and they call themselves specialty.
Yes.
So please.
Hopefully you'll hear something soon. Okay.
Thanks, sir, and please keep up the good work. Thank you.
Thank you, Sarvesh. Thank you so much.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello.
Yes, please.
Hello.
Go ahead.
Yeah, sure.
Yes,
Thank
Rahul,
you. Thanks
please.
for this opportunity. Sir, with regard to this quarter in December, has our raw material prices gone up?
Yeah, the raw material prices has gone up. Yes.
Okay. Because what I was trying to do some math, for 9 months we had about 74% coming from specialty films. So specialty films or the value-added business, I'm not asking for the exact margin, but what could be the differential between value-added products and the commodity products in terms of margin, roughly?
No, we cannot give this.
Okay.
We don't give the individual margins there, more for competitive reasons.
No, I'm not talking about individual products, sir. Just a rough cut, see what could be the differential between the margins.
See, the differential itself is a big competitive edge that comes in.
Sure.
Because we are able to, in the value added, the premium is high, as you would understand. That's why value added. And commodity is really commodity. So we are very careful in protecting that information because naturally there is, everywhere there is competition, We want to just be a little careful there, if you understand that. Yeah?
No, I understand. So I appreciate that. Why I'm asking this question was basically because for 9 months, as per our presentation, our valued business is 74%. And for 6 months ended, it is at 64%. So when I try to, recalculate or back calculate for this quarter, December, it looks to me that almost 88% of our turnover is from valued films, doing a simple math. And against that, I am seeing that our gross margins have actually fallen compared to the earlier 2 quarters. So which is what I got a bit confused. On one side, your valued business is almost 88% of the revenue, and on the other side, our gross margins are actually falling.
Mr. Pathak or Mr. Pradeep, would you like to take that?
That depends on the product mix as well as market mix. So there are multiple reasons for that.
So Rahul, the way that it should be looked at is if you look at it too closely in a quarter, you'll not be able to get it because like Mr. Pathak explained just a few minutes ago that, in the Christmas time, there's a different product that comes in and our flexibility allows us to do any product at any time. And in fact, we look at unit margins very carefully in that sense. So that's the reason that this small aberration that you might see is not a major thing for us when we look at a slightly long term, meaning which is about 2 quarters, 3 quarters down the line. It just becomes normalized, in fact, better.
Because there are good margins in Western countries when we sell to Europe and USA, where we sell almost 50% of our revenue comes from there. But it drops down during the Christmas time because there are holidays. And we plan accordingly for the rest of the world and the product which are we ship for this market. So that's why that difference is there.
Sure. Thank you so much.
Thank you, Rahul. Thank you so much.
Thank you. Ladies and gentlemen, as that was the last question for today, I would now like to hand the conference over to Mr. C.J. Pathak from GARWARE Polyester Limited for closing comments.
Yeah. Thank you all for participating in the earnings call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to us through our investor relation agency, Blue Lotus Communication. We are thankful to all our investors who stood by us, and also thank you for your continued confidence in the company's growth. Going forward, and with this, I wish everyone a great evening. Thank you very much.
Thank you. Thank you very much. Thank you very much, gentlemen. Thank you.
Thank you very much, sir. Ladies and gentlemen, on behalf of GARWARE Polyester Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.
Thank you. Thank you.